Markets shrug off ceasefire flip-flop as the Nifty reclaims the 24,000 mark amid risk-on sentiment, and broader indices outperform even as the correction in tech stocks gap gains. Most sectors advance in trade, IT and pharma are the drags.
TCS signal cautious optimism, staying AI-led transformation is becoming mainstream with strong deal pipelines and enterprises modernization driving demand, while clients remain selective amid macro uncertainties. Spending on tech transformation continues. Brokerages remain constructive but trim targets.
And Wipro is back in focus as the board plans to consider buyback on April 16th, with the stocks under pressure over the past year. With a strong net cash position, a potential buyback could support sentiment, improve EPS and signal management confidence.
HDFC Bank gears up for key board-level decision with the NCR set to meet on April 17, a day ahead of earnings. The committee is likely to evaluate leadership appointments, including CEO reappointment and the search for a new chairman following Atanu Chakrabarty's exit.
And Sun Pharma is closing in on the potential $12 billion acquisition of Organon, marking its most ambitious global bet yet. The company has completed due diligence and is now finalizing financing, with multiple global banks backing the bid.
Eicher Motors gains after Enfield enters the electric space with the launch of the Flying Flea C6, marking a strategic shift into urban EV mobility. The company looks to tap into the fast-growing electric two-wheeler segment while building a new premium category.
Hello and welcome. You tune in to Buy Now, Sell Now. I'm Ankita Saxena and with me is Kavita Thaplayal. In the next 1 hour, we'll get all your stock-specific questions answered. So start writing into us and we'll get them answered by our fundamental and technical experts. But before we get going with the show, let's take stock of how the market is shaping up at this juncture. Well, a good day, TGIF, yet again. Thank God it's Friday because the markets are really, rejoicing the Friday today, and we have managed to recover all the losses that we saw coming in yesterday. Nifty is trading with gains of 1% right now. We have managed to cross the 24,000 mark on the Nifty. Nifty Bank is also following suit. We have gained 1.8% on Nifty, 1,000-point gains coming in on Nifty Bank. Now remember, Nifty Bank was the biggest loser in yesterday's trading session. So we have managed to recoup all the losses from yesterday as of now. Also, if you look at the broader indices, now remember, broader market was the outperformer yesterday. They were managing to hold the fort despite, a weaker market yesterday. But today also they are building on the momentum, and the broader market is also mirroring the benchmark indices. Mid cap is trading with gains of almost 1%, and small caps is trading with gains of 1.6% as we speak. But as far as the sectors are concerned, Nifty IT is taking it on the chin. In fact, Nifty IT is down 2.6% today. And remember, we did see the results come out from TCS. Inline set coming in, a good order book, a strong commentary coming in. And the brokerages were also positive on that. But despite that, it has failed to buoy the sentiment as far as the IT pack is concerned. But Nifty Realty is the top sectoral gainer as of now, trading with gains of 2.4%. But more on the markets. Kavita, tell us what are you picking out?
So right now, let's go ahead with the show and let's get connected with the management. IRB. We'll be looking into toll collection, which is showing strong momentum with traffic growth driving the toll revenue. Expansions also on the annual with new assets strengthening. Revenue visibility, what's the take ahead by the management on that? New Odisha asset boost tolling portfolio. And overall, toll tariff hikes are also being supportive as far as FY27 growth is concerned, and the company is also expanding its footprint up ahead. So we are joined by Mr. Anil Yadav, CEO, Business Development Investment, IRB Infra. Hi, good morning and welcome to the show. Thank you so much for taking your time out. So let me begin with the total overall toll revenue, which grew up by almost 21% year on year in March 2026. What are the growth drivers behind this, and what, according to you, is the toll revenue outlook going ahead, especially for FY27?
Yeah, good morning. Thank you. Thanks for having me here. With respect to toll collection, we have seen a month, if compare with the corresponding March of the last year with this March, we have witnessed around 21% growth. And even if you'll remove the impact of the new asset addition, the growth is around 13%. And last year, since our toll rates are linked with the inflation, last year we got around 3.5% kind of tariff revision. If you will remove the impact of the tariff revision as well, the volume growth, that is the traffic growth, was 9.5% in the month of March, which is a quite robust. Typically, when we are bidding, we pencil in around 5-6% kind of growth. But this year, across various months, we have seen a significant growth, and that was further improved in the month of March.
Hi, Mr. Yadav. Good morning. This is Ankita also joining in. Mr. Yadav, the IRB Infra Trust project, the SPV commences tolling on, the Chandi Kole Bardak section of NH16. Can you tell us some more on this? What is the revenue that you are expecting from this?
So I think as we have started in the towards end of January TOT 17, which is the state of UP, and from 1st of April we have started Odisha project, and we have entered in the 13th state. And both the projects, in terms of the revenue, those are in line with our estimate. And presently, in fact, both the projects are contributing as per our estimate when we have bidded for this project.
Okay. Road awarding activity saw a decline in FY26 from NHAI. But for FY27, what's the outlook? Any uptick in awarding activity in FY27?
So I think with this year beginning, IRB has started with an asset base of 80,000 crores, and we have aimed to reach to 1,40,000 crores. Though the award activity was low on the lower side, we have bagged almost 14,000 crores worth of project as against 5 to 6,000 crores kind of yearly run rate, which we used to have in earlier years. So this year was a significant for IRB. We have reached to almost 95,000 crores kind of asset base. And now coming to the new pipeline, largely IRB will be going forward, will be participating in the asset monetization program of the government, where in the budget they have talked about 3 lakh crores kind of asset to be monetized over the period of 4 years. And later on, the government has increased that to 4.5 lakh crores kind of monetization by the in the road sector. So I think that is the good pipeline for next 3 to 4 years. And we are on track to reach 1,40,000 crores kind of asset base by FY29.
Right. Mr. Yadav, you were also targeting 3 to 4 more TOT projects to be financially bid out in FY26 with a potential combined value of around 10,000 odd crores to 12,000 odd crores. Now the FY26 is completed. What is the update on this?
So I think that bidding is a regular process, and I think those projects are under pipeline. And within the next couple of months, those projects will be bidded out. And there will be more projects which will be coming in terms of the bidding of those bidding is concerned.
All right. I think with that, it's time up. We'll let you go. Thank you so much for taking your time out and talking to us. Thank you. But then let's shift focus and let's proceed towards the FNO segment. Let's look at FNO 360 powered by 5 Paisa. Our colleague Sajit Mangat is there with all the update. Sajit, how is FNO market looking?
Thanks, Kavita, for that. The markets are looking strong in morning trade with this Nifty is nearly up a percent at this point in time, hovering about the 24,000 mark. And that's a crucial mark for the Nifty because a lot of positions were built at that level. Being the resistance coming in from many quarters there. But open interest is down nearly 1% in today's trade. You're seeing some shorts getting covered, and that's also one of the reasons why you're seeing market up in today's trade. But Nifty Bank is again another index which is up nearly 1.8% as we speak, about the 55,800 mark. With again, there's some shorts which is getting covered there. Look at some of the Nifty Bank constituents. You will see that there's a long buying across all the companies, especially except for AU Small Finance, where there's a short covering. There's a long buying which is is happening in HDFC, ICICI Bank, Axis, and SBI. So public and private sector banks all are rallying in today's trade, with the Nifty Bank up nearly over 1,000 points in today's trade. On the call and put writing, if you look at it, 24,000 is seeing a hectic put writers activity which is there, and 24,300 is also seeing some hectic writing. But if you look at the distribution for the April 21, which is next week's distribution graph there, you will still have some kind of resistance which is coming in at 24,000. So that's a crucial one which is there. But 23,900 and 23,800 has put writers which are more which are having a better hand as compared to the call writers. Among futures gainers, you have stocks like Lodha, which is seeing a long buying, Asian Paints and Exide are the other stocks. Exide seeing some short covering, stock up more than 4%, between 4 and 5%. Futures losers, you have stocks like Sun Pharma, where we are seeing some short buying, Infi is down, Coforge is down. So IT is pretty much down in today's trade. The IT index is also down over 1% as we speak. But open interest gainers is where we are seeing some activity, where Godfrey Phillips is seeing some long buying, 21% open interest up. Motilal is seeing some long buying with 18% open interest up, and Cochin Shipyard is another stock where the open interest is up by over 15%. Among the losers in the open interest pack, you have BSC, where we are seeing some short covering, Bosch is seeing some short covering, and Oil India is seeing some long unwinding as we speak. Most active stock option in today's trade is TCS. TCS 2600 April call is seeing 13.12 lakh contracts getting added to open interest there. The stock below the 2500 marks down nearly 96, with the premium down nearly 46.5 to 24 rupees there. But again, in the put as well, you have TCS the most active, with TCS 2500 put is being seeing a good active strike price which is there, with 2.21 lakh contracts getting added there, and the premium up nearly 23 rupees as we speak to 65.5. So the stock is IT stocks are a little soft in today's trade as we speak, but there's a good buying coming from banking, and that's pushing the Nifty higher.
All right, Saji, thank you so much for joining us with the roundup of the FNO universe. But with that, it's time for a quick break. Don't go anywhere, because after the break, we're coming back and getting all your questions answered. So start writing into us. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now, and let's get connected with Anand Rathi Wealth Management, because need to know in terms of growth and number trajectory, what's the way up. We are joined by Mr. Rakesh Agrawal, CEO, Anand Rathi Wealth. Rakesh, hi, morning. Welcome to the show. All right, so Q4 FY26, AUM was down almost 6%. How much of this was from the market correction, and how much were the net inflows in Q4?
So we had a positive net inflow, strong net inflow, about 3,000 plus crores. But despite that, we had a 6% drop in AUM. And that means that the market impact was about 10% down. And this is temporary in nature. So as and when the market recovers, the values of the AUMs will go up.
Mr. Rawal, with the PAT growing faster than the revenues and the margins remaining strong, are we really currently at the peak profitability, or is there still room for operating leverage in FY27 and sustainability?
So there is some room, not too much, in terms of margins improving from here. So significantly, profit growth will follow revenue growth in 27 and beyond. So we see a fairly strong 27, both in terms of revenue and profits, which is also there in our guidance.
When we look at net inflows, they have increased in single digits for FY26. Now, is this a temporary slowdown, or since the markets are volatile, how are you reading the investors' behavior right now?
Our net inflows continue to be strong. There were some 13 odd thousand crores this year, and we expect this to be better for next year as well. And as far as the volatility is concerned, volatility has been there in every year of investing. Every calendar year, the markets move up average 10 to 15% from peak to trough. And that's part of the risk that investors take in this journey of investing. We haven't had any. Well, I would say this war has created some levels of disappointments because the year has ended a little disappointingly for returns for this financial year. But investors are seasoned people, and they've taken it on the chin, and they're very, very positive for the next year. We believe that, and if you look at our past as well, our results and performance has been market agnostic. For example, the last quarter itself, the markets have been badly impacted, but the results have been fairly good. So when you have long-term investing, markets do play a role, but a limited one. Strategy plays a larger role.
Mr. Rawal, but there has been a sharp surge in your other income in quarter 4. Was this a one-off, or if so, what were the constituents?
Yes, there were. So we have some investments in our in the NBFC Anand Rathi Global, and there were some valuation gains in that, which are one-off, and therefore what we are really looking, and there's some one-off costs also in terms of stock options for management, but we are really looking at the growth without the one-offs. And the growth without the one-offs for our profit is in the range of 29%, and revenue is 22%.
When we look at the AUM mix, what does the AUM mix look like at the present current juncture? Are you planning any structural changes in your products, or overall mix catering to the turmoil in the markets is the same?
No, none at all. So the three elements or the four elements are equity mutual funds, which are 55%, structured products, which are about 28-29%, debt of about 4%, and other assets of about 14 to 15. So that significantly remains similar quarter on quarter. Yeah. So there's no significant change in the product mix. We continue to be focused on trying to deliver a 14-15% return to customers with a beta of 0.6. And therefore, the mix to do that has been quite steady all these years. And we believe will be steady in the future as well.
All right, Mr. Rawal, thank you so much for joining us and weighing in on the numbers and the growth roadmap ahead. We'll let you go on that note. But up next is an exclusive roundup of... Welcome back. You tune in to Buy Now Sell Now. We'll be getting all your questions answered. I'm Ankita Saxena, and with me is Kavita Thaplayal. And let's get going. The number is flashing on top of the screen, so start writing into us your stock's buying price, the holding period, and your query, and we'll get them answered by experts who are not joining us. G. Chokalingam, who's the founder and head research, economics research, is joining us now. On the fundamentals and on our technicals, we're joined by Kunal Bothra. Hi, good morning to the both of you, and thank you so much for joining us to answer all the questions. Let's get going then and get the first live caller who's now joining us, Kiran, who's joining us from Chennai. Hi, good morning, Kiran. Kiran, okay, so we will take the Kiran as a WhatsApp question. We seem to have lost the line, but Kiran has written to us saying that he's bought 1,715 shares of Nalco at a buying price of 220 rupees. And also five-star business at a buying price of 639. Also has bought India Mart for 2,323 rupees. He wants the advice, but he has not given any time horizon. But Mr. Chokalingam, let me come to you first on these three counters. Nalco, five-star business, and India Mart for the next 1 year. What would be your view?
Nalco, maybe another 5% upside is possible based on the valuation. And five-star business, it has cracked more than 50% from 52-week high, and therefore now it trades around 1.5 times price to book value, which I believe very comfortable to hold it. Even one can add for medium to long term. The other third stock I have not tracked.
All right, thank you so much for that. But Kunal, let me come to you also. Would you concur with Mr. Chokalingam? What is your opinion on these three counters?
Yeah, hi. Good morning. So I would sense that all three stocks are quite good enough. I would say India Mart, Five Star, Nalco. I think all of three have done very well for themselves in their respective time zones. India Mart, yes, the stock has gone through a correction in the last, I think, one and a half odd year, like many of the mid caps and large cap names have already gone through. But this could be a good territory where you may look to go for averaging out for India Mart at levels around 2000 level, which is coinciding with the previous major support. So I would sense all three names are quite attractive. Would suggest a hold on these names. For India Mart specifically, you can consider averaging out closer to that 2000 mark.
All right, let's move on. Let's take a WhatsApp question. This is coming in from Mr. Thomas George. He's from Kochi. He's a senior citizen. He's got 100 shares of Hitachi Energy at 4887. He wants to hold it for 2 to 3 years and wants to know the strategy up ahead. Mr. G. Chokalingam, do you have any strategy for him, or maybe the levels he can look on it for 2 to 3 years?
I am not comfortable. Rather, I would sell slowly because valuation wise, I think it has played out in a big way.
Okay, thank you for that view. But let's go across and get a live caller now who's joining us. Hi, good morning and welcome to Buy Now Sell Now. Tell us, what's your question?
My question is, Aarti Industries, I bought it at 762, average price, 150 shares.
All right, so this is Mr. VVS Prasad who's joining us from Hyderabad. You've got Aarti Industries at a buying price of 762. What's your holding period, sir?
Holding period I can hold as long as I want.
Okay, so there's no time cap. Okay, so
there's no time limit.
Right. So, Mr. Chokalingam, let me come to you for this one. Aarti Industries, say for the next 1 or 2 time horizon, do you see more upside to this? He's bought it at 115. He's already sitting at a good. He's bought it at 762. I beg your pardon. So he's sitting at a loss right now. What should he do? What should be the strategy?
Part of good management, good product profile. Unfortunately, these kind of chemical businesses going through tremendous pressure on the realization. The margin also down for last 2-3 years. Therefore, the valuation is stretched. But certainly, one can hold for long term, at least for another 2-3 years. One up cycle will come. Chemical sector always cyclical. Once in 3-4 years, up cycle also comes invariably. So one can play on that up cycle by holding it for next, anywhere 1 to 2-3 years.
Okay, let's move on and let's take other WhatsApp question. That's coming in from Ron. He's from Mumbai. This question is specifically for Kunal. He is holding Tata Consumer GAIL, and he wants to shift this exposure to ITC or Coal India or Power Grid. And he's asking, can he also hold these counters indefinitely? Okay. I do not have his levels at which he's holding. I don't know the status, whether he's in profit or losses. But will you recommend that kind of a diversification or shift, Kunal, from Tata Consumer and GAIL to ITC or Coal India or Power Grid for long term?
Not really. In fact, I think Tata Consumers is one of the better charts. GAIL also, I think, has been doing very well for itself. Now, if you try and compare GAIL as a price movement to maybe Coal India, Power Grid, I think it's very, very similar. Of course, different business models at the end of the day, but the price patterns are very, very similar. So when the wave of PSU stocks outperformance comes, that's a zone where I would believe GAIL, Power Grid, Coal India, etc., they would start to do very well for themselves. You might just want to probably wait for that phase to come, maybe over the next few months, over the next couple of quarters. We might probably enter into that kind of a phase. I would recommend, however, maybe few out names which are looking attractive from the power stocks, other than what you've other than what you've asked for. You might want to look at the traditional name NTPC. I think that's a much more stronger chart emerging on multiple time frames. The stock has been exhibiting very good strength over the medium term chart specifically. So that's one stock which you may want to look at. If in case you are looking to build something from the high beta pocket, from a trading slash investment perspective, you might want to look at Adani Power also. I think that's also a very encouraging chart and is now come back towards a major breakout levels on a multi-year basis. So that's a couple of other recommendations other than what you asked for.
All right, thank you for that, Kunal. Let's move on and get on a live call on board now. Sabina from Noida is calling us. Hi, good morning, Sabina. Thank you so much for calling us today.
Yeah, hi. My query is for ONGC. So I hold 400 shares at 267 rupees. So can you please help me to understand if I need to hold or, get out of this?
And what's your holding period, Sabina?
It's more than 1 year.
More than 1 year. Ms. Jokalingam,
Yeah.
ONGC, an interesting pick, especially when the oil prices are so volatile. She's bought it at 267 rupees and she's made a small marginal profit there. But, by the end of this year, I mean, given the kind of volatility we see in the oil prices, what do you pencil in for ONGC? Should she hold on to this?
See, ONGC is a good stock in terms of governance, being a government company and a large cap, so quite defensive, and third, good dividend yield. But if, is it going to give an enormous wealth? I have a severe doubt, even in the medium to long term, because, when gas and oil prices go up, they don't enjoy full benefit because there are more players in the game to share that gain. And when it goes down, this company faces a lot of pain in terms of lower realization from oil and gas. So at best, in next 1 year, it may give you 10-15%. So it's a suitable stock for defensive investors for medium to long term.
All right, let's move on. Let's take a WhatsApp question. This is coming in from Mr. Murlidhar from Bangalore, and he bought 450 shares of KPIT at 698 a few weeks back. And he wants to know what should be the strategy going ahead. Kunal, a short-term view, if you might want to give.
See, I think KPIT takes a very good chart on the price to, I would say relative price basis, because, the stock in 2024 at its peak was almost at 1900, 2000 levels. That stock has not just halved, it's more than halved. So price wise, I think the 700 territory could be a very good territory where long-term investors can chip in. But my only catch over here is that your time frame has to be at least 1 to 2 years, if not more, for the better part of the trend to play out. If you're looking at this as just maybe a swing trade strategy, say for another few odd weeks, then I think at best you might want to look at, say, closer to 800 or maybe 780 as a near-term target for the stock price. But as I said, if you're looking to encash on the bigger trend for the stock price, then I would suggest extend your time horizon to at least couple of years, because the stock has just entered into a major support territory on the long-term charts.
All right, with that, let's quickly take a breather and we'll come back and get all your questions answered. So you can keep writing into us. The number is still flashing on top of the screen. So you can write into us and we'll come back and get your questions answered. Stay tuned.
Welcome back. The Adani Group has announced 33,000 crore investment in Odisha across 3 major projects, data center, thermal power and cement. Now, the power project forms the bulk of the investment aimed at strengthening energy security, while the data center will support AI and digital infrastructure. Now, speaking at Khordha, Karan Adani highlighted the group's structural role in Odisha's growth and said, we are here not as visitors but as builders, aligning with the state's $500 billion by 2036 economic vision.
Today, we break ground on 3 projects that are not only simply an investment in capacity, they are investment in what Odisha is becoming. The first one is on the data center at Info Valley, Bhubaneswar, with an investment of 800 crores, is not a building full of servers. It is going to be Odisha's claim on digital economy, the infrastructure through which AI, cloud computing, and digital governance will flow for decades to come. This project will create employment of 200 high-end jobs directly and indirectly. The second project is the thermal power plant near Cuttack with an investment of 30,181 crores, which answers a question that no industrial economy can avoid. Where does the energy come from? Growth without reliable power is growth that stalls.
All right, let's move on and get started with all the questions yet again that you've been sending us. Our research expert, of course, Mr. G. Chokalingam is here with us, and Kunal Bothra on the technical. So let's get going. This is Subi, who's writing in from Noida. Subi says that they've bought 100 shares of Tata Steel at a buying price of 174. Should I book profit or should I hold? They haven't really given the holding period, but Kunal, I'll come to you for this one. Tata Steel at a buying price of 174 already made some profit there. Should Subi book profits, or is there more upside in the near term?
See, there is room for more upside for the stock in the near to medium term. But my only catch is that with so much of news flow, geopolitical events surrounding markets, it's very important that if if you're making money of almost 20% in this case, for your stock in terms of trading, then you have to try and trail your stop losses to a point where you may want to ensure that you may want to lock out your gains the moment the market or the stock goes into a reversal. So my suggestion would be that either you can book partial profits over here and trail your stop losses to say closer to 190-92 range for Tata Steel. If not, if you're not looking to book partial profits at current juncture, then I would suggest trail your stop losses to closer to 196 for the stock price. So that's my suggestion. You can hold on to the stock if you're a medium-term investor, but you need to have some sort of trailing stop loss at play for this kind of a trading strategy.
Okay, so that's the advice on Tata Steel. Mr. Bharatwaj from Coimbatore, he is asking on Varun Beverages, 220 quantity of Varun Beverages at 560. He wants to hold it for 3 to 4 years. He also wants to buy more, and he wants to know whether the current level is attractive for that, or he should be booking losses and replacing it with some other counter of the same sector. Chokalingam sir, what's going to be your advice?
One can hold. Valuation is still stretched after the correction. I would not suggest sell, but one can hold for medium to long term. In case the growth momentum picks up further, then one can add. One can wait for these Jan-March results also to decide on that. So otherwise, till the results come, it's a good to hold.
All right, whole call on Varun Beverages there, but let's move on to the next question. Balan is writing in. Balan wants a suggestion of 5 good buys in different sectors. He's looking at Shriram Finance, Kotak Bank, Cochin Shipyard, Tata Motors and ITC. All good names though. Mr. Chokalingam, what is your opinion on these names that Balan has just mentioned?
A good name, no doubt. But only thing is, within these are all large cap, and the industry prospects are, not same for all. So I would rather prefer considering stocks like L&T. I think the worst is behind. The severe correction is a great opportunity. It's a solid growth stock, and I would also consider HDFC Bank, and then HAL, Hindustan Aeronautics, Apollo Hospital. These are the 4 large cap stocks. I am very optimistic.
Okay. Let's take Nikhil Sharma's question, and he's holding 120 shares of NMDC at 79.48. The target price predicted is 92. He wants to know whether he should be booking profit or exiting and buy Infosys or any other auto stock. Kunal.
So I would suggest that you can book out profits over here for NMDC because it's not just about the stock trying to hit the 92 mark, but it's the time taken to hit that. So with the stock being very low beta, I think it's always better to try and move towards a stock which is slightly moderate to high beta for itself. I think I would recommend something from the auto pack. You might want to look at M&M. That's a very interesting chart at current juncture. Even Maruti, to a larger extent, I think seems to have shown signs of bottoming out formation on the short-term time scale. That's another name which you want to look at. From the other stocks, if I have to recommend, then I think something like BHEL or Concor on the short-term charts are also something which is looking attractive to me, specifically from a swing trading perspective.
All right, so that's perspective coming in. But let's move on to the next question that is coming in. This is coming from Ravi Shankar, who's writing in from Hyderabad. Now, Ravi Shankar says that he has invested around 20 lakhs in the past 4 to 5 months. Adani Enterprise, Godfrey, Keynes, SBI, Canara Bank, BEL, Eternal, Vikram Engineering, except for Adani Enterprise and Godfrey, are all in the green around 90,000 profits as of today. Can he continue with these shares, and what are the shares that he should exit? Okay, I mean, that's rather brave of him that he's invested 20 lakh rupees in a market like this, in the past 4-5 months. But he says besides Adani Enterprise and Godfrey, names like Keynes, SBI, Canara Bank, BEL, Eternal, and Vikram Engineering, are these names good to hold for future? Mr. Chokalingam, what do you feel about these names?
For long term, some of the stocks like BEL, even Keynes India, after they launched a semiconductor, worth holding. Even Adani Enterprise also but one can hold. Eternal, I have doubt. I mean, short term, if there is an opportunity to make profit, I would exit.
All right, let's move on. Let's take this other question. And this is coming in from Nitin from Nashik. And this is for both of you actually. Is it time to average Polycab? He's bought it at 6950. Indigo recently entered at 4530, and he also wants to buy any CDMO stock. He wants a technical as well as fundamental view on both of these. So Kunal, I'll start with you, and Polycab we can take first. He's bought it at 6950.
So yeah, I think you can continue to hold on to these names. Polycab at current juncture, Indigo also I think has been a good price point where the stock has gone through a decent correction over the last 3 to 4 months specifically. So I think both of these stocks specifically are looking attractive to me. I would recommend a hold, would not recommend an add further at current levels.
All right, let's move on to the next question then. This next question is coming from Kiran from Pakala. Kiran says that he's purchased Tata Steel, SBI Bank, Canara Bank, IOC. Please guide me on these counters. This is for the short term. Okay, so he's bought these names 2 days back and he wants to know the short term perspective. Kunal, I'll come to you. SBI Bank that he's bought at 100 rupees. He's bought SBI, I beg your pardon, Canara Bank and IOC at 145. What is the short term perspective for these counters?
Yeah, I would recommend a hold on all three names. I think both SBI and Canara Bank from the PSU names are the ones which are looking very attractive on the short-term charts. They've gone through a decent correction. The best part is that many of these PSU banking stocks, they were, you can say darlings in the last calendar year, 2025, and where the last 4-5 months of the previous calendar year, they had given spectacular returns. And from there, these stocks, start of 2026, have gone through a decent correction. So the price point for both SBI as well as Canara Bank is attractive. Even the case with IOC. My only concern is that crude oil being the major raw material over here, you might see a lot of volatility, which could shape up in the next few weeks, few months for crude oil prices. That would probably impact, of course, the near-term trend for IOC. So that could be the only stock which I would believe could be a bit of a catch-22. As of now, would recommend a hold on all three of the names.
All right, so that's the recommendation coming in. But then let's quickly shift focus on the AMFI March data that's flashing on the screen as well. Total AUM inflow has come at around 73.73 lakh crore as compared to 82 lakh crore. This is the month-on-month number that we are flashing on the screen. Total equity AUM inflow has come down to 3198 lakh crore versus 35.39 lakh crore. Slight dip over there. But then if we go sector-wise, if we talk about category funds, large cap fund inflow has come down to 2889 crores, 98 crores versus 2112 crores. So 2,998 crores versus 2112 crores month on month. Mid cap has seen a rise as compared to Feb's 4,003 crore. The number has come to 6,064 crores. That's an up move over there. Even the small cap fund inflow has gone up. So in Feb, 3,881 crores. It's come to 6,264 crores. That's an up move over there. Talking about sectoral funds, a slight dip, 2987 in Feb. Now it is 2699. But ELSS fund outflow has come down to 437 crores. One significant development is on the gold ETF side. The inflows have come down. So from February's 5,255 crores, the number has come down to almost 2,266 crores. Now that's the volatility that we are factoring over here. But then what's really standing out is the inflow in the mid cap and small cap space. Everything else so far looks very expected. We are waiting for the SIP numbers. But if we look at the outflow, so liquid fund outflow has gone up significantly. I mean, that was again expected. Similar line of outflow coming up high in credit risk funds, almost up to 330 crores that we can see right now. ELSS fund and even the sectoral funds, there has been a dip. So overall picture is coming on expected lines. The SIP numbers will tell us how the retail investors are behaving when it comes to volatility. And since these are the Feb numbers, we are yet to factor in the war volatility in these numbers. So that will come maybe next month. But so far, the mid cap and small cap space is standing out with the inflows going up. And yes, the gold ETF numbers that we saw surprisingly making headlines in last 2 months, especially in these numbers, have seen a dip so far. So waiting for the SIP numbers, Ankita, and then we'll get a clearer picture as far as AMFI data is concerned on mutual funds.
Absolutely, Kavita. It's the SIP number that we're waiting and watching out for. But we'll get you all of that as and when it trickles in. But with that, it's a wrap on at least this edition of Buy Now Sell Now. We'll thank you so much, Mr. Jokilingam and Kunal, for joining us. We'll wrap up this edition. Kavita and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Market action continues on ET Now.